This episode was brought to you by Brian Prowl of the Palmetto Mortgage Group. Let's get you home. And by HomeMattersSC.com, building on what matters and on relationships.
Hey, Brian, thanks for being here with me today and meeting with me.
Thank you for having me. I appreciate it.
Yeah, so Brian Prowl, is that say it right?
Prowl. Yep.
See, I'm mutilated. The regional president for Palmetto Mortgage Group. He is going to talk about mortgage rates today in hopefully simple terms so I can understand. So tell me, where are the rates today?
Yeah, we get that question a lot. As a potential home buyer, that is probably the number one question we get asked.
Sure.
We checked it just a second ago. The national average rate for the last week was at 7.3%. Mm-hmm. So that's higher than what a lot of people are expecting coming out of the pandemic lows. We saw
Which
rates.
were the historic lows.
All-time historic lows.
All-time historic
and
lows.
not expected to continue or get back to that point anytime soon.
Yeah.
So yeah, you have rates in the threes or even mid twos in some situations, and then people expect to hear somewhere close to that, and then they see that rates have come up to the sevens, and they get a little sticker shock from that sometimes. But if you are like us, and we've been in the business for a little while, so you can go back and see like the historical average for interest rates is still above where we are currently, right? So you're looking in the 7.5, 7.8, almost 8%.
These
range.
are really good rates. I mean, they aren't the best we've seen in our lifetime, but they certainly aren't the worst.
And no, not even close. And they may continue to go higher going forward. We don't really know. I guess the point of what I like to have the conversation about with home buyers is the rate is what it is currently, right? You don't know what it's either going to go up, or come down, or maybe stay the same. We don't really know. And we can give good advice, and we do on what we expect to happen in the market. But what I like to tell people is if you have a need for a house, which there are a lot of people that have a need for a house, we've got to figure out if it makes sense to buy a house. And I think personally that right now is an excellent time to buy a house. The reason for that is no matter what outlet you look for, what source you're looking for, everybody who predicts home value appreciation is expecting somewhere between 6 and 10% appreciation over the next 12 to 18 months.
Yeah.
And so what's good, and I don't want to sound self-serving when I say this, but what's good about rates being a little bit higher is that if you hopped in a time machine to 18 months ago and rates were in the threes, if you wanted to buy a house, you would be one of 10 or 12 offers on that house. You would end up spending $50,000 or $60,000 more than the listing price to get that house, if you were able to even get it. The line out the door for open houses were through the roof. I mean, it was just a really difficult time to get what your family needed in a housing situation done.
Yes.
And that's not quite the case right now. I mean, we're still limited on inventory and there's still high demand for houses. But with rates being where they are, it is affording opportunities to people that couldn't buy the house before to get into a house now.
Right.
And the perfect part about that is if rates drop, which we do expect them to do in the next 12 to 18 months, if you work with a lender that has your best interest in mind, they're going to refinance that loan into a lower rate. So your payment will drop when you refinance in the future, but you're not going to miss out on 10 to 20% in home value appreciation, which in real dollars, if you're in the average price point in our area is about $300 to $350.
$350, yeah.
Okay, so that's $35,000 to $50,000 of equity appreciation that you might miss out on if you decide to wait to buy a house until rates come down. So I am of the belief that buying a house is one of the quickest ways to accumulate wealth for your family. It is putting your family in a more stable and better situation. And financially, the numbers bear out to make a lot of sense that now is a really good time to buy a house.
Yeah, because for one, you're not going to be, like you said, you're not going to be competing, and you're not, in addition to having your down payment for the mortgage, you're not going to have to pay the seller. We're not seeing people having to pay $10,000 and $20,000 over asking just to get the house. So, I mean, it is a good time to buy.
Well, in addition to that, if you're going to pay more for the house, and then if the house doesn't appraise, you're going to have to foot the difference in cash.
Right.
And so you're risking extra cash in that situation, and you're not having to do that now. So to me, it makes a lot of sense to buy a house today.
Right. And from the seller's standpoint, it's a good time to actually sell, because, I mean, you've got probably the most or almost the most equity you're going to have in your house. depending on how long you've been there. I mean, you're going to have a whole bunch of equity to put down on the next house, which is the only time that can ever be done.
Well, that's a very good point. So if you happen to be lucky enough to buy a house pre-2019,
Yeah.
then you've got a whole bunch of equity built up.
Right.
If your rate's low, that's great because your payment's low. But to your point, if you're looking at this as a wealth accumulation tool, which a lot of our clients do, then the appreciation on a $500,000 or $600,000 house is significantly more dollars than the appreciation on a $200,000 house.
Right.
Right. It's the same percentage, but dollars wise, it's going to be it's going to impact your family in a way that's significant and something that should not be overlooked.
Right. Now, there are ways that people can buy down or get a lower mortgage rate. By like buying points and putting down more money. And what are some of the other things that can be done?
No, there's a lot of options for that. First, you can do a permanent interest rate buy down where you just pay extra fees to get the rate lower. And that, I would say, happens on the majority of loans today. So there's some level of discount point being paid today to get a little bit lower rate, to make the payment a little bit more affordable.
Right.
But there's other more creative ways that I think you're alluding to here, where you can do what's called temporary buy downs. And temporary buy downs can be structured in several different ways. You can do a 1-0 buy down, which means for 1 year, your rate is going to be lower. You can do a 2-1 buy down, which means for the first year, your rate is lowered by 2%.
Right.
In the second year, it's lowered by 1%, and then it goes to whatever the market rate is for the rest of the term. Those are pretty popular loans to talk about now because we're in a scenario where, because of the buyer situation with what we talked about, less buyers being out there for the houses,
Right.
some people are able to negotiate the seller to help offset some closing costs. And if we can do that, you can use a temporary buy down. Well, 2% off your rate on a $300,000 loan is significant
Chunk of
on your
change.
payment. That's a big deal. And it makes the payment to where you can step up into what the full payment would be. But the goal, and nobody can guarantee this, obviously, but the goal is we expect rates to come down significantly in the next 2 years.
Right.
So if that happens, you will just refinance into the lower permanent rate, and then you'll never have to go up to the higher rate. So there's a lot of creative ways on the temporary buy downs front to do it. There's other products that are out there for people that if they're looking for split payments, you can do second mortgages with your first mortgage, but you've got to have a pretty significant down payment in order to do that, and a lot of people
Right.
don't at this point. So yeah, there's different ways to structure the loan to make it advantageous. And what a lot of my loan officers and what we look at is, if you're buying a house today, we're not structuring your home purchase loan as a one loan and we're done scenario. We expect to do a second loan for you in the future because we do expect rates to drop. And so I want to structure it in a way where you're not paying absorbent fees up front,
Right.
because you'll refinance before you'd be able to recoup the cost on the lower payment for the fees that you would pay. And that takes a individualized conversation, kind of one-on-one,
Sure.
based on each individual scenario. But what we do here at the Palmetto Mortgage Group is run a break-even analysis. Okay, here's the fees that you can pay to get this payment. That equals X amount of months for you to break even. If it's more than 2 or 3 years, I'm likely not going to recommend it
Yeah.
because I expect you to refinance into a lower rate in the future.
Right. Now, what about some of the special programs? Obviously, that's one. The programs that you guys have here are loan programs.
Yeah, well, first and foremost, we are a direct seller servicer, which means that we have no overlays. And I could go spend an hour with a call with you about what overlays are, but there are a lot of banks and a lot of mortgage companies that don't have the ability to sell directly to Fannie Mae and other companies like that. So what means is, so Fannie Mae, for example, sets a set of guidelines. And then most banks have additional guidelines that they have to adhere to, which makes it sometimes more difficult for buyers to get approved for the house that they want. We at the Palmetto Mortgage Group have no overlays on any agency products. So that's a very big deal for a lot of home buyers that are out there.
Right.
Secondly, we do have a lot of unique programs. So we have a no income loan. So there's borrowers, if you have a decent credit score and 20% down, I don't need to count any income for you, which is great for self-employed borrowers that write off a lot of expenses so they minimize their tax burden. It's great for people that have moved or they're new to the area. For example, we just closed a loan for a buyer yesterday, moving from, I think it was Rhode Island, sold their house, had a whole bunch of money to put down on a house here, but hadn't set up a job yet. So there was literally no income that we could use to qualify for them for their loan. But they had more than 20% to put down
Right.
and a good credit score. Well, that person doesn't deserve not to buy a house.
Right.
And so we have a program that I don't know anybody else that offers it around here. So that's a unique program that we have. If you're looking to build a house, we do one-time closed construction loans for conventional loans, FHA loans, and VA loans with 100% financing.
Oh, wow.
All right, so there's a lot of veterans and active duty military that would love to build a home, but are being told they need to put 5, 10, or 20% down. And with us, that's just not the case. We have 100% financing construction loans. So uniqueness of product is something that we're good. I'm doing a 5-unit investment property loan right now.
Oh, wow.
Borrower was denied by 3 other lenders because they couldn't. It's technically considered a commercial loan.
Right.
But we're under contract to close this month on that property.
Wow.
Yeah, so
great.
I could spend a lot of time going through each individual program, but what I like to say is if there's a way to figure a loan out, we've got the product set for it and the skill set in order to figure it out for that buyer.
Yeah. That is a lot of good information. And thank you for giving us all that explanation and telling us about the market rates. And if you've got any questions, call the guys up here at the Palmetto Mortgage Group and talk to Brian or one of the other agents here in the office.
Absolutely. Thank you for your time.
Thanks.
This episode was brought to you by Brian Prowl of the Palmetto Mortgage Group. Let's get you home. And by HomeMattersSC.com, building on what matters and on relationships.